Greetings, and welcome to the High Flying Tutors Academy channel. Today, I'll be helping you on how to prepare a general journal, where we are also going to be accounting for VAT. So, without any waste of time, let's just go to the question. We are going to do a KM traders, where it says the following transactions are found in the books of KM traders. KM traders are registered for VAT, and therefore all the transactions include VAT at 15% where applicable, unless otherwise stated. Perpetual inventory system is in use and goods are sold at 5% on the cost price. So that is our markup. And then we are given balances on the 1st of March 2018. We've got our bank at 45,000 rand, capital at 390,000 rand, trading inventory at 30,000, debtors control at 36,500, creditors control at 29,000. Right, so let's go to the additional information or transactions. I'm just gonna read the transactions for you, and then after that I'll be reading and recording these transactions. So transaction number 1, it says the owner increased his capital contribution to 500,000 by contributing computers worth 50,000, and the rest was in cash. Brought trading inventory on credit. They say bought trading inventory on credit for 108,300, paid carriage on this goods 876 rand cash, sold goods for cash 28,500, paid rent for the month 39,900, bought a delivery van for 342,000, paid a deposit of 50,000 rand, and the remainder will be paid in 4 equal installments. 4 equal monthly installments from the 1st of April 2018. Paid JP Traders, the only creditor on the 1st of March 2018, amount owing as at 1st March, and a settlement discount of 5% was received. So if you see here, they did not indicate the amount, so it means the creditor that we are owing on the 1st of March 2018 is the one on the balances right there. Okay, just gonna put a highlight there so that you remember when we are going to record. Okay, and then they say according to the bank statement, 2,000 was paid to Memento Insurance for the following: vehicle insurance premium for the business 1,140, and the remainder was for insurance to cover the owner's private residence. Right, and then 28, they say the owner took goods with the selling price of 1,000, VAT exclusive, for own use. And then the last transaction, they say to you, paid salaries and wages 45,000. Other items on the bank statement is a debit column, service fees 300, checkbook fees 296. Those are our bank charges, so we're just gonna add them and record them in the general journal accordingly. And then credit column, interest 1,490. And then you are required to record the above transactions in the general journal of KM traders, including narrations. A penalty will apply if narrations are omitted. So please do not omit the transactions, the narrations in your test when you answer. A round of all calculations to the nearest rand. So I was just reading this so that we can be able to go and prepare our general journal properly. So we are going to read these transactions recording, right? So this is our format of the general journal, where we are going to do the transactions of the month of March 2018, where we're going to have to record the date, so the details, the debit, the amount, the account to be debited and the account to be credited, right? So let's just go and start with transaction number 1. So transaction number 1, they say the owner increased his capital contribution to 500,000. So by contributing computers worth 50,000 and the rest was in cash. So if you check right there, we had a capital of 390,000. So it was increased from 390,000 to 500,000. The capital was increased to 500,000, right? So it was increased from 390,000 to 500,000. The other monies were contributed for cash, and the other value was equipments, which are computers that were contributed that worth 50,000. So now we want to see how much was the addition on the capital for it to go to 500,000. How much was the addition, right? So for us to calculate the addition, I'm just going to go down there just to do the calculations for you. It was 500,000 that was increased to 2. We're going to say 500,000, right? We minus 390,000 of the current capital, or of the opening capital. So how much are you getting there? How much are you getting there? Just put this on your calculator quickly right there, and then we'll be able to get how much was the capital contribution. So the capital contribution, as I put it on my calculator, 500,000 minus 390,000. The owner has contributed, 110,000. 110,000 in total of capital, right? 110,000. Okay. And then remember, in the 100,000, there is cash, and there is also computers. There is cash and computers. Computers, they said, is 50,000, right? 50,000. So how much was cash? So for us to calculate cash, we have to say the cash for capital, 110,000, right? We minus 50,000 of computers to check how much was contributed as cash. How much was contributed as cash, right? So it's going to be less 50,000. So as I put it on my calculator, less 50,000 for computers, I get 60,000. So cash was 60,000, and equipment, which are computers, was 50,000. So how do we record this transaction, right? So remember, equipment is an asset. Bank, which is cash, is an asset as well, and they are increasing because there's an increase in contribution of the capital through these assets. So whenever assets are increasing, we debit them. So it means we have to come into our general journal. We debit our bank. We debit our bank worth 60,000, right? And then we also gonna debit our equipment worth 50,000, and then we are going to credit our capital. We are going to credit our capital, right? We're going to credit our capital because our capital is it's an owner's equity account, and whenever owner's equity increases because of the contribution that the owner has made, there's an increase in capital in the business. So whenever there's an increase in capital, there's an increase in owner's equity, and when owner's equity increases, we credit. So we're going to credit our capital or our capital, right? So this one is an equipment that's supposed to be actually debited, right? Not credit, debit. We are only going to credit our capital of total, which is 110,000. Remember, okay? Right, and then we have to narrate because we are not accounting for VAT on capital because there is no VAT charged or there's no application of VAT on capital. So we are going to narrate. When we narrate, we are just going to say additional capital introduced or additional capital contributed. Additional capital contribution. Additional capital contribution. So you can just narrate like this, or you can say additional capital introduced. Okay, so this is how you narrate the first transaction. And then I forgot there, don't forget please to mention the date. So the date this transaction happened on the 1st of March, right? So we put 1 there. Okay, and then now we are done with transaction number 1. Now let's go to transaction number 2. Let's go to transaction number 2. Transaction number 2, 1, let's go there. Transaction number 2 happened on the 5th, right? So on the date, we're just going to indicate 5 right there. Okay, and then let's go and read the transaction and here how do we record it, how do we go about it. So transaction number 2 that happened on the 5th of March, it says you bought trading inventory on a credit for 108,300, and you also paid carriage on these goods. So there's 2 transactions here of buying the inventory on credit and of paying goods, a carriage for those goods at 876. So we are going to separate these transactions, right? We're going to record 2 transactions in transaction number 5. How do we record these transactions? Number one transaction in transaction number 5, because like we've got transaction A and B here actually, right? So number 1, we bought trading inventory on credit. 2 accounts affected. There is going to be creditors control and inventory. And then because it's where we purchase, we are going to record, or we are going to account for that on this transaction. So let's see how we record this transaction. Remember I said to you, 2 accounts affected is going to be trading inventory 1, 2 creditors control, and we account for that when we record in the general journal. So let's go to the general journal and record this transaction. 1, we are going to debit trading inventory because it's an asset and it's increasing, and whenever asset increases we debit. So trading inventory, and then we also gonna account for that. When we account for that, we're going to debit VAT control, or you can just say input VAT, because input VAT is the VAT that incurs when you purchase, right, at 15%. Okay, and then we are going to credit our creditors control. We are going to create our creditors control. And if you check the way I record my things, they don't follow each other. What I'm debiting, I am debiting. You see there, I've debited these two and I have credited this capital. So please record like this. Do not make your things follow each other or create some queue that we don't understand, right? That will not be following the principle of crediting and debiting. So now we are going to credit our creditors. We're going to credit our creditors control. Okay. Right. And then now we have to record the monies, right? So our monies, because I started by this account so that I can be able to explain it better. So now the creditors control is going to be the total of the amount of goods you have purchased or bought. So how much is the total amount of goods purchased? It's 108,300, right? So we are going to credit that as creditors. We're going to credit that as creditors. So we go to our general right there and we record our total of 108,300. Okay. And then after that, we are going to calculate how much did we pay for without VAT, because creditors control include VAT. An amount that include VAT is equals to 115%. That is the amount that include VAT. And then the VAT control is just 15% of the amount, which is going to be 108,300. You multiply by 15 out of 115, right? And then how much is the VAT right there, right? And then the inventory is going to be the amount that exclude VAT. So it's going to be 108,300 multiplied by 100 divided by 115. Okay, how much is your inventory there? How much is your inventory there? And then trading inventory, it's going to be, as I put it on my calculator right there, I am getting 94,174. 94,000, 94,000, 94,174. And then our VAT is going to be 14,000, 14,000, our VAT is going to be, let's see, 108,300 multiplied by 15 divided by 115. I am getting 14,126. 14,126. Yes. And then when you edit the Q, remember they must give you a total of this creditors control. 94,174 plus 14,126. Right? You are getting 108,300. Right? This is how you record transaction number 2 that happened on the 5th of March, right? And then you also have to record the purchase, or the payment of carriage on purchases, paid carriage on these goods of 876, right? So to record that, we are going to create another transaction right there. We're going to create another transaction right there. Okay. So on carriage, remember the carriage is going to form part of the cost of trading inventory. So when you record this transaction, you are going to account for trading inventory, because remember we are saying trading inventory because of the system that we are using as well of periodic inventory system. Okay, so we are going to call our carriage trading inventory because it's going to be part of the cost of trading inventory, right? And then we also have to account for VAT up there, VAT control. We also have to account for VAT. And then we're also going to debit up to credit our bank because now we are paying for the transport or the carriage on purchases. Therefore, when we pay, our bank is decreasing and our bank is an asset and it's gonna decrease, right? So when it decreases, we credit, okay? And then now, we're gonna record the total amount that we've paid. The total amount that we've paid, it includes VAT, which is 115, right? So our bank is going to be the one that is including VAT 115, okay, which is equal to 876, okay, and then our VAT control, is going to be our VAT control is going to be 876 multiplied by 15 out of 115, okay? And then our trading inventory is equal to 100%, so it's going to be 876 multiplied by 100 divided by 115. So how much are you getting right there? For trading inventory, I am getting, let's see, I am getting 762, and then for VAT control, I am getting 114, right? When you add both of them, they must give you a total of 876, okay? All right, and then that is how we record transaction number 5 in full. And then when we narrate, we can just say bought goods on credit, bought goods on credit, and paid for carriage on purchases. Carriage on purchases. And paid for carriage on purchases, right? That is how you can narrate this transaction. Or you can still divide these narrations into two. You can narrate for buying goods below here, and you can come in and narrate for paying for carriage on purchases, no problem, right? And you can also decide to narrate for all of them at once, okay? So that is transaction number 2 that happened on the 5th of March, right? So we are done with transaction number 2. We can go to the next transaction. We can go to the next transaction, which is going to be transaction number 3. Let's see. Transaction number 3 happened on the 11th, right? So it means we go there on our date. We are going to say on the 11th, right there. And then let's hear what does it entail, okay? Let us hear what does it entail. So I'm just gonna put it here quickly. 11, okay? And then let's just see what does it say. It says sold goods for cash, 28,500. Sold goods for cash, 28,500. Okay, so since we are dealing or recording according to the perpetual inventory system, on every transaction where it's a sales transaction, 4 accounts affected. 1, since we bought inventory, we sold inventory for cash. Since we sold inventory for cash, we are going to have 4 accounts affected. Bank, which is cash. and then we sold sales, and then we also have to account for cost of sales of the inventory. I hope you guys are following. Okay, so now we are going to the general. How do we record this transaction? Number one, we are going to record the sales transaction, the transaction of selling. Then we will come and account for cost of sales after. Okay, so let's record for sales transaction. So when we sell, we said we sold for cash, right? Sold goods for cash. So we're going to debit our bank because it's increasing. We are receiving money. Why did we receive money? Because we made our sales. We credit sales because sales is an income account. And whenever income increases, we credit, okay? And then how much did we sell for? How much did we sell for? We sold for 28,500. So we come to our general right there and say 28,500. And then even on the sales transaction, we're going to say 28,500. And then after that, we have to narrate. When we narrate, we're going to say sold goods for cash. Sold goods for cash. Then after that, we have to record we have to account for the cost of sales or the cost of goods sold. We have to account for that. When we account for this, we are going to debit our cost of sales. We're going to debit our cost of sales, and then we are going to credit our inventory because there's a decrease in our inventory. When we sell, the goods are going out to the customer, right? So there's a decrease in inventory. So we're going to credit our trading inventory. Trading inventory, okay? And then now, after we are going to calculate for cost of sales. We are going to calculate for cost of sales, right? So we're going to calculate cost of sales, right? But remember, on this transaction, oh, sorry, I forgot to outline what? VAT. If you check that, I forgot to outline VAT. Let's just outline VAT first. VAT goes with our cost of sales. So we're going to credit VAT, control there. VAT, control. We had to account for VAT. Sorry for that. We have to account for VAT. We have to account for VAT. So when we account for VAT, it means bank is equal to 115, okay? Let's account for that. Bank 115, and then our sales is going to be 100%. So it means this one is not correct, okay? This one is not the correct one. We need to fix that one, okay? So when we account for VAT here, we have to open brackets and say the amount of bank, which is 28,500. We multiply by 100, we divide by 115, okay? That is how we account for VAT. And then we also have, so this is the correct way. So the first recording was not correct. I'm just correcting that, okay? And then 28,500 multiplied by 100 divided by 115. How much are you getting right there? Let's put that on the calculator quickly. And then I am getting 24,783, okay? And then how much is our VAT? Our VAT is just 15%, right? So we're just going to say 28,500, and then we multiply by 15 out of 115, okay? So how much is your VAT right there? How much is your VAT right there? Amount for VAT. How much is your amount for VAT? Quickly put that on your calculator. So on my calculator, I get 3,717. That is my VAT control. So I am done recording this transaction the correct way. The first one, we missed VAT. Now we accounted for VAT, okay? And then now, the narration, sold goods for cash, no problem, or goods sold for cash, no problem, right? English. All right. And then now, cost of sales. When we account for cost of sales, we are going to use this sales to calculate cost of sales, the sales without VAT, the sales without VAT. So when we account for it there, we are going to say, we are going to account it together with what? Markup, okay? We're going to include markup here. So when we include markup, when we include or account for markup, I mean for cost of sales, we have to calculate the cost of sales using our markup of 5% on the cost price, right? So remember, for us to record this, it means we have to say open brackets. We are going to say, remember I said we're going to use sales, this sales, right? We're going to use this sales of 24,783. So we're going to say multiply by 100 because the principle of the markups is whenever the cost price, whenever the markup is on cost price, the cost price is equals to 100, and then our cost price is our cost of sales. Then we're going to divide by 105 because our sales is going to be equal to 105. So how much is your cost of sales right there? So on the cost of sales, we're not going to account for VAT, okay? We're not going to account for VAT. So I am getting 23,603. 23,603, okay? And then our trading inventory is going to be 23,603 as well. Okay, so we are done accounting for the cost of this inventory that was sold. So when we narrate right there, when we narrate, we are going to say cost of goods sold brought into account. Cost of goods sold brought into account. Cost of goods sold brought into account. Okay, that is how you narrate for when you record the transaction of sales, and then you also have to account for cost of sales or for cost of goods. So this is how you do it. Okay, so please remember, if you're not going to narrate and they ask you or they give you an instruction that you must narrate, you are going to lose marks. They will penalize you some marks. Okay, so please always remember to read all the instructions in the test and make sure that you are recording the correct way, and you also account for narrations if they want you to narrate. Okay, and then let's go to the next transaction. This is how you record transaction number 3 that happened on the 11th of March 2018. Okay, so let's go and record or do the following transaction. So the transaction that follows is transaction number 4 that happened on the 14th. So we have to go and record the date there, 14, right? And then let's see, what does it say? It says paid rent for the month, 39,900. Okay, you paid a rental for the month, 39,900. Okay, two accounts affected. There is going to be rent expense or rent paid and bank, right? So you are going to debit rent paid or rent expense. So let's go and to the answer sheet right there. You are going to debit rent expense or rent paid, right? So rent paid is an expense, and when expenses increase, we debit, right? And then we made a payment. When we make a payment, there's a decrease in our asset, which is banks, and when asset decreases, we credit. So bank right there, bank. But remember, we also have to account for VAT. Let me not forget this one again. We have to account for VAT. So when we account for VAT, we're going to debit VAT control because it's a VAT input. Because VAT input, remember, it's a VAT that it's accounted for when we make a payment or when we purchase, right? And then when we sell, up there on transaction number 11, when we sell, is VAT output. and we have to credit it together with the what we are selling. You see now. So when we pay, VAT control must be debited. It's VAT output, VAT control. VAT control right there, okay? And then you're gonna account for what you paid here, which is your total payment. The total payment. So you paid 39,900, right? Which is your bank. That is equal to 115. And then your VAT control is equals to 15. So you're going to say 39,900 multiplied by 15 out of 115. Okay? And then how much is your VAT? How much is your VAT right there? How much is your VAT? So your VAT is equal to 5,204. Okay. And then how much is your rent paid or your rent expense? In brackets, you're gonna say 39,900. You multiply by 100. You divide by 115. Okay. Divide by 115. Right? And then how much is your rental without VAT right there that you've paid? It equals to 34,696. 34,696. And when we add them, we are still getting 39,900. That is our transaction number 4 happened on the 14th. Okay. And then now you have to narrate. When you narrate on this one, you can just say paid monthly rental. Paid, narrate here, paid monthly rental, right? So that is how you record transaction number 4, right? That happened on the 14th. Okay, so we are done with transaction number 4 happened on the 14th. Now let's go to the next transaction if you understand this. So the next transaction, it says you bought a delivery van for 342,000, paid a deposit of 50,000, and the remainder will be paid in 4 equal monthly installments from 1 April 2018. So in this transaction, it just means that you bought this delivery van or this vehicle on credit, and you also paid a deposit of 50,000. Okay, so it means you have to record the purchase of this delivery van and also record the transaction of making a payment for deposit. So you're going to record for the purchase on credit, and then you also have to account for deposit. Okay, so how do we record this transaction? Let's go to our answer sheet right there quickly. Transaction, when did this transaction happen? Let's just double check that on the question. It happened on the 19th. So date 19. Okay, and then since you bought on credit, 2 accounts affected is going to be vehicle and vehicles and creditors. 1. We are accounting for the purchase of vehicle. We haven't accounted for we are not accounting for deposit now. We are accounting for the vehicle purchased, right? So when we account for this vehicle, we are going to debit vehicles because there's an increase in our asset. Vehicle is an asset and is increasing when we buy more. So we're going to say vehicles. And then we also have to, because we are, remember I said our VAT is going to be debited always when we buy or when we purchase or when we make a payment. Like we paid rent in transaction number 14, right? We paid rental, then we accounted for VAT and we debited it. Even here, we are purchasing a vehicle on credit, we account for VAT. So our VAT control is going to be debited. VAT control. which is VAT input, okay? And then we are going to credit creditors control because we purchased this vehicle on credit. So we're gonna say creditors control, right? So our creditors control is going to be the total amount that we have purchased the vehicle for, which is going to be let's see on the question right there, which is going to be 342,000. Okay, and then this 342,000, remember it includes VAT, which is cost to 115%. Okay, which is cost to 115%. Okay, so now our vehicle is going to be the amount of vehicle must exclude the VAT. When we exclude the VAT, we're going to say the amount that include VAT, which is 342,000, we multiply by 100, we divide by 115. Okay, so how much is your amount for the vehicle right there? I am getting, let's see, when I put it in my calculator, how much am I exactly getting here? I am getting 297,391. Okay, and then our VAT is going to be 342,000, and then you multiply by 15 out of 115 because this includes VAT. Okay, and then how much is your VAT right there? Your VAT, let's see, let me put that on my calculator and see how much am I getting. When I put that on my calculator, I'm getting 44,609. Okay, that is your VAT. Okay, and then we are done with accounting for the purchase, or we are done recording for the purchase of the vehicle on credit. Now we have to go and record what? We have to go and record the deposits. We have to account for the deposit now, right? Let's go and account for the deposit and then we will narrate after. So when we account for the deposit, we are going to credit creditors control because our creditors control is decreasing in this line because we are making a payment, okay? So it's going to be creditors control because the liability, and when liabilities decreases, we debit creditors control. Okay, and then of how much? Of the amount that was paid for. We're not going to account for that for this deposit. It's already accounted for on this transaction because this deposit is going to reduce this amount. So we're just going to say 50,000 right there. And then we go to the debit, to the credit side, we put our bank because there's a decrease in our bank when we make a payment. So bank, and bank is an asset. Whenever it decreases, we credit. So 50,000 right there. Okay. And then we are done with this transaction. And then now we have to narrate. When we narrate, you can say the vehicle bought and a deposit was paid, or bought a vehicle because narration is just the summary of what happened or what the transaction says happened, right? So bought a vehicle and paid deposit. Paid deposit. Okay, then that's all. You have recorded transaction 19. Okay, and then we can go to the next transaction. It's just easy as this. So please make sure you go and collect marks when you get a question like this. So let's go to the next transaction. We proceed to the next transaction. So the next transaction happened on the 21st of March, right? It says paid JP traders, the only creditor on the 1st of March 2018, amount owing as at 1st March, and settlement discount of 5% was received. So here we are going to record the receiving of discount, we are also going to record our payment. So let's start with recording the payment that we've made. So we've paid, and when we pay, we received a settlement discount, right? So when we pay right there, our creditors are going to decrease. So our creditors, when they decrease, they're decreasing with the total amount that we are owing them. Creditors control, right? How much are we owing to these creditors? Let's see. We are owing them 29,000, right? So it means they're decreasing with the whole amount of 29,000. Remember, creditors control is a liability. When it decreases, we debit. So 29,000, okay? And then we paid, but how much did we pay? We paid an amount less than 5% because we are granted a discount of 5%, right? So when we record on the bank, because we are paying, our bank is definitely going to decrease, but with an amount less than 5%. So we're going to say bank, and then open brackets, we do calculations to minus the 5%. So it's going to be 29,000 multiplied by 95, because we are no longer going to pay 100% of the amount we are owing. We're going to pay 95 because there's a minus of 5% settlement discount. So we're going to say 95. We divide by 100, right? So how much there? As I put this on my calculator, I am getting that I have made a payment of 27,550. Okay. And then now, after that, I'm going to account for discount received. I'm going to account for discount received. When I account for discount received, remember discount received, it is an income. And if discount received is an income, it's increasing. It means there's an increase in our incomes because we received a discount, right? So whenever incomes are increasing, we credit. So we are going to credit discount received. Discount received. Discount received. And then we are also going to account for the VAT control of that discount, not of the whole transaction, only for the discount. Only for the discount. Because remember, discount, I mean, the VAT control was accounted for when we were buying on credit. Now we are just reversing the VAT, right? So we're going to account for VAT control. This is a reversal of VAT input. Because when we purchase, remember we have to pay, or we are paying a VAT input, okay? So now, we are going to also debit VAT, credit a VAT control. So how much here? So how much is our discount? Our discount is going to be 5%, right? So our discount, I can just put calculations down there. Our discount, this is transaction 21. We're just doing calculations there, right? Just doing calculations. So we need to calculate what discount. So discount amount, it's equal to total amount of 29,000 multiplied by 5 out of 100. So how much are you getting right there? Let's put that on the calculator quickly. So it's going to be 29,000 multiplied by 5 out of 100. So I am getting 1,450. 1,450. So now this 150 include VAT. This 1,450 include VAT. We need to record the discount without VAT, right? So when we record the discount without VAT, it means we have to open brackets and do that calculation, right? It's going to be 1,450, and then you divide by, you multiply by 100, you divide by 115. How much are you getting right there? Let's see quickly. Multiply by 1,450 multiply by 15 divided by 1. multiply by 100 divided by 115. So it's going to be 1,450 that include VAT multiplied by 100 divided by 115. How much are you getting there? How much discount did you receive without VAT? I am getting 1,261. 1,261. That is your discount without VAT. And then you also have to account for the VAT for the discounts, right? So when you account for the VAT for the discount, you also have to go there, open brackets, which is going to be 1,450. You multiply by 15. You divide by 115. Okay? 115. And then how much is your VAT for that discount received? The VAT for the discount received, how much is it? As I put it on my calculator, I am getting 189. 189. All right. So we are done recording this transaction. That is how you record this transaction. Okay. Remember, this transaction happened when? On the, let's see, I forgot to put the date there. It happened on the 21st, 21, right? So it means you have to go here and say 21. 21, that's the date, okay? That's how you record. Please do not forget to mention the numbering and the dates on your transactions because it can really cost you. So you need to make sure that you do the right thing. Okay? So just want to account for this. So this was the calculation for the discount received. Just put it properly there. Okay? And then we are done with this transaction. We have to narrate for it. When we narrate for this transaction, what can we say? We're going to say paid a creditor in settlement of our account. Paid a creditor. Paid a creditor in full settlement of our account. Or you can say paid a creditor and received a discount. That will still be reasonable. Paid a creditor in full settlement of our account. So that will be still reasonable, okay? And then we are done with this transaction. Let's go to the next one. So you see, when there's a discount, you have to account for creditors control, what you received, discount received, and then you only account for the VAT for the discount, or you must record the discount without VAT and account for the VAT for the discount aside as well. That's how you've got this transaction. Because the VAT was accounted for when the time you were purchasing, right? So we cannot account for that twice. Right, and then let's go to the next transaction. I hope I make sense. And then the following transaction happened on the 25th, right? 25th of March. It says that according to the bank statement, 2,000 was paid to Memento Insurers for the following: vehicle insurance premium for the business, 1,140, and the remainder was for insurance to cover the owner's private residence, right? So it means we need to account for what? For two things. We have to account for the insurance of the business, and we also have to account for the insurance of the owner, right? So let's start with the insurance of the business. For the business, we paid 1,140, okay? So two accounts affected, and we must account for VAT as well, right? Two accounts affected, and we account for VAT. That's transaction that happened on the 25. right? We have to account for VAT. So when we account for VAT, insurance is an expense. And when expenses incur or increase, we debit. So we're going to say insurance, and then we also account for VAT control because we are making a payment, remember, VAT input. And then we made payment, we paid. So since we paid, it means we have to credit our bank because our bank is decreased. Credit our bank right there. And then we want to record our total amount of the bank, full amount paid. So full amount paid, let's see, it was how much? 1,140. So let's go there. This is our bank, 1,140. Okay. And then we are going to account for VAT. When we account for VAT, the insurance amount will be excluding VAT. Right? So which is going to be 1140, we multiply by 100, we divide by 115. Okay, and then we also gonna account for VAT control. So let's just get the answer for insurance there quickly before we account for VAT control. So it's going to be 1140 multiplied by 100 divided by 115. So I am getting 991. I am getting 991. Okay, and then VAT control is going to be, let's put the calculations in brackets right there. VAT control is going to be 1140 multiplied by 15 out of 115. Okay, and then how much is your VAT right there? So your VAT is going to be 114 multiplied by 114, 0 multiplied by 15 out of 100. I am getting 171. That's VAT control. That's VAT control. See, you have to say 1440. Sorry for that. I think you have to see 1140 multiplied by 15 out of 115. I mean to say, and I'm getting a 149. That's the correct answer. 149. 149. When you add the two, they must give you 1140. Okay, we have accounted for the owner. I mean, for the business insurance. Right now, we're going to account for the owner. This was the business. Now we are accounting for the owner. Right? When we account for the owner, we are not going to account for we're not going to account for we're not going to account for we're not going to account for that, right? So whenever the owner is making it's like the owner has made a withdrawal here. So it's going to be drawings, right? So drawings in owner security account that decreases. So we're gonna say debit drawings because whenever owner security decreases, we debit. So we're gonna debit drawings and then we credit what? Bank. We're gonna credit bank because there's a decrease in a bank, right? So it's gonna be bank. So our bank is going to be how much? Let's put that in brackets. It's going to be 2,000 in brackets right there, less 1140, right? So how much is your drawings right there? Let's see. So it's going to be Let me just put that on my calculator. It's going to be 2,000 less 1140. I'm getting 86. I mean 860. So 860 right there. We're not going to account for the VAT, right? So 860. We're not going to account for VAT. Okay. And then we are done recording this transaction. Then we can now we can narrate. Remember, the first transaction we accounted for the insurance of the business. We are also indicated the VAT on the amount paid. Here we are also indicating what the owner's insurance for his private use, right? So now we can narrate that. When we narrate, what can we say? Let's see what happened on the transaction. And what can we say when we narrate? We can say paid insurance. We can just say paid insurance for the business and the owner. Paid insurance for the business and the owner, right? Because that's what we did, right? That's what the transaction says happened. Okay, so let's go to the next transaction right there. So the next transaction, um let's see. The next transaction, it says the owner took goods with the selling price of 1,000, VAT exclusive for own use. So the owner took goods for own use at a selling price. So we need to report goods on their own cost, not on the selling, unless we sell. That is why even when we sell, we also account for the cost of sales. But here we're not selling, so we're just only to calculate the cost of goods that the owner took and record, right? So let's go and do that right now. Okay. So when we record these goods, we are also going to reverse that input. So it means this time we're going to credit our VAT control. So accounts affected is going to be drawings, the owner took inventory, trading inventory, and VAT control. So let's see how we record this transaction. To record transaction that happened on the 28th, right? Transaction happened on the 28th. We are going to debit drawings because remember the owner is making a withdrawal. Drawings through goods, again, through trading inventory. So we're going to debit trading inventory. There's a decrease because the inventory has been reduced by the owner for his personal use. So trading inventory, right? And then we also have to account for the VAT. We're going to debit VAT input or VAT control. VAT control, okay? And then we can narrate after, né? But for now, let's record. So our drawings is going to be equal to what? Our drawings is going to be equal to the whole amount of goods, right? The whole amount of goods. But remember, we have to account for this transaction properly. Okay, remember the goods that were taken were on selling price. Okay, so and they said is VAT exclusive. So an amount that excludes VAT here is going to be this trading inventory, right? But how do we calculate this trading inventory? We have to say the total amount of goods of 1000 multiplied by 100 divided by remember we need to convert this to cost of sales, so it's going to be 100 divided by 105 because our VAT, I mean our cost, our markup is on cost, I mean to say, not VAT. Our markup is on cost price, right? So, and whenever the markup is on cost price, our cost price equals to 100. So, and then since our markup is 5%, therefore our selling price is going to be 105 and our cost is going to be 100. So we're going to say 100 divided by 105. So 1000 multiplied by 100 divided by 105. Let's see how much we are getting right there. Let's see how much we are getting right there. So it's going to be 1000 multiplied by 100 divided by 105. So I'm getting 952. 952. 952. That's what I'm getting for trading inventory, right? Therefore, I have to account for VAT. Remember, this amount exclude VAT, and drawings must include VAT, and I have to account for VAT as well. So here I've got an amount that excludes VAT. So when I calculate my drawings, I'm going to open brackets and say 952 multiplied by 115 divide, because now I'm looking for 115 out of 100, right? So how much is your drawings right there? How much is your drawings right there? Let's see quickly. On my calculator, I say 925. Oh, 952, sorry, 952 multiplied by 115. I divide by 100, okay? So I'm getting a drawings of 1095 1095, okay? And then my VAT control is going to be open brackets 952, you multiply by 15 out of 100. So how much is your VAT control right there? So your VAT control, let's put that on the calculator, is going to be 952 multiplied by 15 out of 100. I'm getting 143. 143. That is how you record transaction 28. That's how you record transaction 28, and then you have to narrate. You have to narrate. When you narrate, you can just say the owner took goods for own use. The owner took goods for own use or for personal use. Okay, that's how you record transaction 28 or transaction that happened on the 28th, right? And that is the narration. So we also have the last transaction on the question right there. The last transaction on the question. Let's see, what does it say? It says paid salaries and wages are 45,000, and on salaries and wages we're not accounting for VAT there because people pay a lot of deductions right there, and even VAT, even SARS is paid right there. Even the UIF, SARS, and all of that, they are paid already. So we're not going to account for VAT on the salaries and wages. You do not account for VAT on salaries and wages, right? So let's see how we recorded this transaction. Paid wages and salaries. Paid wages and salaries. paid wages and salaries, 45,000. So two accounts affected here is going to be bank and salaries and wages. So let's go and record that. Right? So it's transaction 31. Transaction happened on the 31. Okay? So you are going to debit salaries and wages because they are expenses. Salaries and wages. And then we credit our bank because we made a payment. Bank. Okay? Of how much? 45,000. Remember, we're not going to account for VAT here. So 45,000. We do not account for VAT on salaries and wages, as I explained. And then narration. Narration, we can say what? Paid salaries and wages. Paid salaries and wages. Paid salaries and wages. Paid salaries and wages. And then we are done. That's transaction 31. And then under this transaction 31, there's a lot of transactions that took place there. So we need to record all these transactions under this date. Right? We need to record all these transactions under this date. Okay. So another transaction that happened is of bank charges. So bank charges, obviously on bank charges, we must account we must also account for VAT. On bank charges, we are going to account for VAT. So let's see how we record this transaction. We're not going to put the date because all these transactions took place on the 31st. Okay. So let's account for the following transactions, or let's record the following transactions. Another transaction is when we see on the debit column, there's service fees and there's also checkbook. So checkbook and service fees, these are bank charges, right? These are bank charges. So when you record them, you are going to debit bank charges because it's an expense, bank charges or bank fees. You can just say bank charges or bank fees. You also have to account for VAT control. You also have to account for VAT control, and you paid for this, right? Because they are in the bank statement. Definitely you paid. And then bank, right? So the bank is going to be a total of how much? A total of 300 plus 296 of checkbook and service fee. So it's going to be 300 plus 296. And then how much did you pay for bank charges? Let's add them quickly and see how much is it. When I do my calculations there, I see that I've paid 596. And then I have to account for VAT. So when I account for VAT, I'm going to say 596 multiplied by 15. Because this amount includes VAT, I divide by 115. Remember, up there was no inclusion of VAT. So that is one. And then here, the amount include the VAT. That's why we divide by 115. Where it doesn't include the VAT, we divide by 100. Okay? Just to clarify the VAT issues. And then, how much is your VAT control right there? Let's put that on the calculator quickly. I'm getting 78. And then I go to bank charges. Bank charges must be an amount that excludes VAT. So to exclude the VAT from bank charges, we're just gonna say 596. We multiply by 100. We divide by 115. Okay, and then how much right there? 518. 518. That is your bank charges without VAT. Now we are done with that. So we also can narrate. When we narrate, we can say bank charges brought into account. Bank, because we say brought into account because it's just the bank showing you on the bank statement. We're just indicating it in our books. Bank charges brought into our account. Then we're done for that transaction. Okay. Now we can go and record the last one. The last one is for bank charges. I mean, it's for interest. And it's still under the same date. So if you don't want to make mistake or you feel like it's wrong, you can just put the 31. It's still the 31. Or you can just put one date there and then you leave it like that. Even this one happened on the 31st. Right? So okay, and then we have to record for that. Okay, so when we record for, let's see, what does it say, this transaction? They say credit column interest. So it means we receive the interest. Credit column in our bank statement indicate an income. So it means we have received interest maybe from our investment, right? So how do we record this transaction of receiving interest? We're going to debit bank because we are receiving money right there, and credit our interest income or interest received. Interest received or interest income, no problem. And then of how much? Let's see. Of 1,490. No, we don't. There's no interest. I mean, VAT on interest. So on interest, there's no VAT. Okay, we don't account for VAT on interest. Right, and then we're gonna narrate for that transaction. We're gonna narrate for that transaction, which is going to be interest received brought into account, or interest income brought into account. Brought into account. Okay, and then this is the end of our transactions or our question. So I hope this is going to help you. This is going to be fruitful for you. And thank you for watching. Please do not forget to subscribe, like, and share. And where you have questions, you can just put a comment. I'll attend to it. And remember, we also offer private tutorials at a cost. And if you are interested, you can just put a comment. I'll attend to it as well. And also, we also do live sessions where you find that I'm teaching live on YouTube as well. And then if you want to join our lives, there are free WhatsApp groups where I add people who want to join our lives when I go live. So also put a comment if you are interested. I'll attend to it. Please, again, do not forget to subscribe, like, and share. Put a comment if you have a question, and salute.